Many of you have asked me for an update on SOFI. SOFI is finally showing some signs of life. The stock is up 16% over the last 5 days, but it's still down a whopping 33% year to date. I believe this recovery is only getting started. Things are looking much, much better. And the setup is looking really, really interesting with the company guiding massive growth over the next 3 years in earnings per share, while the multiple is trading at its all-time low, at least over the last few years. So the setup is looking really, really good. The CEO is buying the stock, so he bought at $16, 15, 17. In total, he purchased about $2 million over the last 2 to 3 months. So the CEO is clearly buying, and he doesn't just buy at any price. He tends to buy near major inflection points. The last time he bought the stock, and he bought aggressively, like 200,000 a week, he was buying at $6.50 to $7. After he bought, the stock went to $34 per share, and now he's buying again aggressively in the $16 to $17 range. So he knows the company much more than we do. He's saying it's undervalued, and he's buying the stock. And he even said on a podcast that he's looking for like leaps or like call spreads to leverage bet on the stock over the next few years because he believes it's undervalued. I mean, you have to appreciate this conviction. And he wasn't buying at 30, 25, 20. He's buying here at $15 and $16. So that really tells us a lot about the stock. And I'm going to talk about it again today. The growth on the company has been impressive. As you know, SOFI is a bank. They do lending and they do many different things, mainly origination right now. So a lot of the times they're not actually holding the loans on their balance sheet. They're more of a middleman, mostly at the moment, where they broker the transaction between a third party, maybe Blue Owl Capital or some kind of a credit company that is putting up the credit and putting up the money with the buyer of the loan or whoever is taking the loan. And they're getting commissions. They're still holding loans on the balance sheet, but they're trying to expand more into fee-based and recurring revenues. But if you look at total members, they've grown from about 970,000 in 2019 to about 14.7 million people on the platform. The company doesn't even have a 10% market share. 10% of the adult population is 240 million. It's about 24 million people. So they barely have like a 4 or 5% market share or 6%. So they still have a long way to go for them to reach any peak maturity or anything in their areas. As the company has been growing really well, revenue growth is reaccelerating, as you can see here, to 41%. Adjusted EBITDA margin has also been expanding. Net income margin is about 15% right now. The company was unprofitable 2 years ago. Now it's turning profits. So now if the company is so amazing, then why is the stock going down? Well, it's down for a few reasons. The first one is the seasonality chart that I shared in my previous videos, and people made fun of it and they thought I was hyping the stock. But so far so good on the prediction, where May has never been a negative month, and now May is about to be a pretty positive month for SOFI, and it should likely continue in June, July, August. Now, if you look at this seasonality chart, the first pretty much 3 to 4 months on average, they tend to be really, really bad. Now, the reason why that happens is the company reports earnings, I believe it was in March or February or March, but early in the year, they report earnings. The CEO has a history of lowballing guidance so he could beat throughout the years. So this is exactly what he did this time. He did not put up high guidance, he lowers the guidance, the market doesn't like it, the stock goes down, then Q2 comes up, he tends to raise guidance again, then the market likes it, the stock recovers, then Q3 comes up and he raises guidance again, the market likes it, and the stock goes up even higher. It's been like that since the company went public, and this is a very predictable chart where 2022, 23, 2024 is the first 2 to 3, 4 months, they were bad, but after that, pretty amazing returns. And it's so far been playing out exactly to the months. So this is so far looking really, really good. But the reason why SOFI lowered guidance was because they were expecting 2 rate cuts this year in 2026 that has been eliminated due to higher CPI because of what's happening in the Iran war, attack, whatever you want to call it, conflict. And it's been waiting on the CPI. So now they're no longer expecting a rate cut. Some people are even calling for a rate rate hike. Now, if Kevin Walsh comes up on June 17th on the meeting and he says that there's no rate hike and could potentially be more of a dovish move, then I think fintech like SoFi and Robinhood could take off in a major way. So there's a lot of upside to this guidance where he's no longer expecting a rate cut. If we do get any signs of a rate cut or at least no rate hikes, then I think the worst was likely priced in, and it's going to get much better for SoFi from here. A lot of people believe that if we have a recession, SoFi could suffer, and I think that could potentially be true. But they have pretty strong borrowers profiles. They don't just lend to anybody. For example, the personal loan borrowers have a weighted average income of $154,000. That's pretty good for an average for the personal loans. And the credit score is 745. In the United States, that's considered pretty much excellent, almost excellent. Student loan borrowers, average income is $161,000 with an average FICO score of 767. I mean, that's really good, guys. This is not a subprime lenders. They're not lending to people with low credit scores at 50 or 60,000. They're not just going for higher interest rates. They're going for a great risk-adjusted return. And this is why the company has survived previous, you could say, economic weaknesses. And I think they can do it again. Now, I'm going to talk about SoFi USD or SoFi stablecoin, which I personally didn't really understand it, but I read more about it and I watched the interview. And this is a very interesting product. So SoFi, for example, again, that's quick math by someone on X, and it says SoFi issues $5 billion in reserves. So let's say in total they have $5 billion outstanding in stablecoins. Okay, and they issued the stable coins to their members, by the way, which no other bank has done. But let's say total is $5 billion. Okay, the federal funds yield is 3.8%. 1.8% is given to market makers and incentives and people to hold the coin. Then SoFi keeps 2%, which is like $100 million in revenues. So SoFi is getting that stable coin, is rolling it out, and they're rolling out payments using the stable coins to Mexico for free and other places. If people use it more and more, SoFi could take the money and they get 3.8% in the treasuries. They pay some of it off as incentives and they pocket the rest for free. This is a almost little to no capex, very profitable business. Doesn't cost them that much. And to me, it looks really good as a potential opportunity for SoFi to generate higher margin revenues that's not so dependent on lending. Now, in terms of the company's guidance, they're guiding about $1.02 to $1.12 by 2028, which is about a 38 to 42% CAGR in total earnings per share growth. If you look at my valuation model, I took the company's numbers of $1.10 for 2028. After that, I put in a structural decline from 30% to 25% to 20% earnings per share growth by 2030. I think this is highly achievable, and I would not be surprised if it was a little bit more than 20%. The current PE ratio is 46 times trailing. I put in 25 times, so this is like a 50% multiple contraction. I think it's conservative. All in all, I'm getting about $41 per share, 129% on the upside, or about an 18% annual return to buy SoFi at today's prices, despite the recent move in the stock. So I believe the stock is undervalued. I personally would use a higher multiple. I think the growth is more sustainable. I mean, if it trades at 35 times earnings and SoFi USD was a success because MasterCard is partnering with them and they're doing a lot of things, if that was the case, then SoFi could be at $58 or almost 26% CAGR on a bank like SoFi with a good CEO. I'm mainly in it for the CEO. You know, I think Robinhood is more innovative, but I like the CEO of SoFi, so I invested in the company before. And I think it's a good setup in general. Looks really good to me, especially at this multiple. So I like SoFi. I still believe it's undervalued, and the setup looks really good to me. I hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.